Alright, welcome to my channel. This is my first video on my channel, by the way, and my name is Chirag Abel as the Hayabusa trader. I'm from India, Northeast, Tripura. So today we'll be understanding a very simple entry model that has a very good win rate, and also that I have been using for a very long time now. An entry model is not just powerful in itself without a daily bias or the right direction. So in this video, we will try to also understand the daily bias covering up with the entry model to boost your win rate excessively. Now we are on the chart GBPUSD on the daily time frame. First, we can see that price came and tapped into the fair value gap here. Now after price came into the fair value gap, there was no as such thing as expansion over here, so we can consider this part as liquidity, right? Now why did I consider this as liquidity? Because we have an order block just below here, so price is yet to tap the order block, so we can consider this as liquidity. And as you can see, there was no as expansion, or you can say what do you call that? Yeah, let's call it an expansion. So we will wait price to come here, and then we will shift into 1 hour time frame, wait for market structure shift, and then we will plan our trade. Now let's play the price. By the way, I'm on FX replay, and this is backtest best backtesting tool ever. So just a minute. Okay, so as you can see, price swept these lows and approaching for the order block. So all we have to do now is wait. Price tap into the order block. What do we see? First swing as IRL, internal range liquidity. We have second internal range liquidity. Now if price close above this high, we can consider this as market structure shift. So let's see if that happens. Okay, this is by the way, this is UTC plus 5:30, that is IST timings. This is around 3:30 a.m. in the morning, which we do not usually trade. We only trade between in the Indian timing, we only trade between 12 p.m. to 10 p.m. at night. So this is no trading zone for me. So price closed above this high. We can now consider this as market structure shift. This will be the target if we get an entry from anywhere below this area. So this is market structure shift. I don't think I have to put any name like MSS here over here, right? You guys understand this. So what can we see? Price has a displacement. We can see a fair value gap and an order block right here, which is a very good confluence, by the way. Now if we wait, price did tap into this order block. Yep. Now again, we'll have to shift into the lower time frames again for extra confirmation. And if we in the 1 hour time frame, and if we go to the 15-minute time frame and refine the entry zone, this will be the refined entry zone here. By the way, this candle is under this candle as an inside bar, so there's no actual POI here. This is a fake POI. If you can, we'll talk about the fake POI on the later on the other videos, because today we'll be only focusing on the entry model, the simple entry model. So Price step into the 1 hour order block. We'll go to the 5-minute time frame and we will wait for market structure shift. And let's also see the timing. This is around 12 p.m. Okay, so that's it. That's our trading zone. We will wait if price wants to close above this high, which is not, by the way. Okay, so price is approaching for this low and we can see some great POI here. So if we do a multi-time frame analysis on 1 hour, we have this order block. On 30-minute, we do have this order block, but the candle did not close below this wick here, so we can still consider this order block to work. Right here, this is on the inside bar, but the 5-minute. Okay, so 1 hour and 5-minute are aligned, and if you understand the basic market analysis, you will know that we have to follow, if you look at the trend on 1 hour, you have to take entry on the 5-minute. So this and that, we'll talk about that later on the other video. So I can see a potential trade right here. So we have market structure shift. Let me just do one thing for you guys. One, we have market structure shift confirm. Two, body closed above the high. Third, we have displacement. Fourth, we have POIs under discount zone. Fifth, last, FHG or order block. So this is our checklist, and as we can see, all checklists are ticked, so we can take a trade from this area, right? Just after the rejection, or you can directly take from, after price tapping into this. So stop loss just below this, or if you want to, save stop loss, you can put below this low. But for this video, we will be just below this low, and we can target these highs, right? This high as first target and final target here. Why this is the first target? As you can see, we have equal lows right here, equal highs right here. So this is a very good trade. And also make sure that if you are targeting anywhere when you are taking a long or short, make sure that you have liquidity to target onto your take profit. So if we play the price, as you can see, the expansion, price went up, right? First TP hit. Usually I at least target for 1 to 3, and then I book 80% of the profits, and then I leave the 20% rest for the final target. So you can follow the same risk management strategy, or you can just leave it up to the final target if you are confident enough. So let's see if price goes there. Bam, TP hit. As simple as that. All you have to do, wait for market structure shift, body close above the high, displacement, POI under discount zone, last FVG, and order block. Simple. Now if we move forward, I want to show you more examples. So price not only swept this high, but also closed above this high, leading us to what? Another market structure shift right here. Let me put this on favorite. So okay, another market structure shift after price tapping into the last POI. So potentially this last POI, we can wait for this last POI for price to visit, and then we can look for another longs. And if we look at 4-hour, right, we do have an order block here, but I consider this order block as fake order block. Why? Because the order block contains of the same color with the FVG and the the other candle. Now let's just say that if there was a blue candle here, we could consider this as a strong order block, but in this case this is a weak order block, so I will consider this as a weak order block. My final targets would be above this high. That's only if we are doing swing trading, but if we are into intraday trading, we'll have to target the recent swings and recent lows. So as for the targets now, do we have any swings? We do have minor swings right here, but I will not consider this as liquidity yet because price did not create any liquidity. So if price, let's just say, went up, the heck, excuse me. All right, where is, okay. So let's just say if price went up, right, respected this high, fall off, sweep of this high, respected this high again, and created a BOS to the downside. Now we can understand that sellers are active in this area, which means that now there are quite few liquidity over this area to target for the future targets around this area, right? So this is the logic, like basic logic of how liquidity works and everything. We will not be covering that today. We'll be only looking for the entry model today, so we will come up that on later on the other videos in the future. Anyways, if we continue the price, now remember guys, we need to wait for this area here, because what does our checklist say? Market structure shift, right? Body close above the high, displacement, POI under discount zone, this is in discount zone, FVG or order block. So this falls into our checklist and we will have to strictly wait for price to visit into our POI. And this is all discipline guys, and you need to be disciplined in order to become profitable in trading. So if we continue, so just like I said, this could be a potential area where price could take reversal from also these highs, right? Now personally, I'm not an retracement trader. I do not trade retracement or pullbacks. That's not my thing. I only try to capture continuation or expansion. So my expertise is onto that, so I cannot really show you guys how to trade pullbacks or catch the retracement, so never mind. Okay, price step into the first zone, and as you can see, some rejections around this area, creating liquidity above these highs, just like I said. Swept, early sellers swept, got swept. Potential sellers liquidity around this area. Why? Because we can see some BOS. Sellers will try to sell from this area again. Right? Some buyers are active from this area again. As you can see, they got stopped out. Buyers got stopped out. Right? Leaving more liquidity above this high has equal highs, guys. Has equal highs. So which is a very good confluence for us to take a trade from this area now, now that we saw that there are enough liquidity to be targeting. So if we wait more, buyers got stopped out, sellers got stopped out. Liquidity above this high, liquidity above this high. All we have to do is wait for our price to be visited, and now we can also see that liquidity created. Why? People will consider this as market structure shift, People will try to take longs from this area, obviously, but we are smart, so we're waiting for our, last POI. So if we continue, again, like I said, this area, right? Price is reacting from this area again. As you can see, the reaction, BOS to the downside, creating liquidity above this high. Let me just color this as blue liquidity. Okay. Now, will price sweep this first or come for this low? Let's just wait. See, this is the reason I do not trade pullbacks, because you don't exactly know how or when price is gonna reverse from which area, so it's very risky. But if we are trading expansion or continuation, you are pretty much more safe comparing to trading pullbacks and retracement. So that's the only reason I'm sticking with my trading expansion and then continuation models. Anyways, if we fast forward this price action, liquidity swept. Let me just shift into 1 hour for big sell-off. As you can see, price is approaching for this liquidity right here, and then we have our last POI, right? Also, we need to check about the timings, guys, because if this is around 11:30 in the morning, 2:30 in the morning, we're not trading this. We should be only trading between 12 p.m. to 10 p.m. IST, Indian Standard Time. Now, I cannot say anything about, if you are living in the US or Canada, I cannot tell you about it. But make sure you are trading in a London session and New York session, at least, if you're not trading Asian session. Asian session is trash, by the way. So price tab into this area. What's the time? 1:30 in the morning, guys. Are we gonna trade this? I don't think so. But let's just say if you are active here, I'm pretty much sure that price is gonna, where's the swing low? This is the swing low. As for the targets, this high, right? So what do we have here? If we look at 1 hour, see, market structure shift, POI, market structure shift, another last POI, price tab into the last POI. Now, all you need to do is wait. Sadly, this is not into between our trading zone, so I think I still took this trade, but as for the rules, we are not trading after 10 p.m. So if we play forward, as you can see, price expanded, right? Proper POI, expansion, liquidity, liquidity, liquidity. Now, if we follow our rule here, this is change of curve. No, sorry, not change of curve. This is market structure shift, right? Body close above this high. Perfect. Let's go into the 5 minutes for better, if we can take any sniper entries. I can see some last POI here. Also, this is quite okay. This is not a POI, this is a fake POI. So we are not considering this, okay? We are only trading. We will be only taking trades if price comes to this area. That is, now it is 10:20 in the morning. We'll be taking trades only after 12 p.m. That is after London session opens. Play forward. Okay, price respected this area, creating liquidity here. Good confluence. See, people will consider this as market structure shift, trapping buyers. Price will sweep liquidity. Bam, liquidity swept. Price tap into our zone. Right, stop loss below this low. Pretty much easy, right? We have our last POI too. Do we have any POI? Okay, this is filled, this is filled. Okay, no POI, so this is a good trade. So if you play forward, can you see, guys? Do you see the expansion from the right POI, as you can see? Right fair value gap or any order block or any POI, price expanded. How much is this? 210 points in under, what is that? Can you, okay, in under 30 minutes in GBPUSD, guys. 200 points in 30 minutes, which is a good expansion. Now if you play forward, I usually cut my trade on 1:3. I book 80%. Now I already achieved the first threshold. Second, I will target for the final targets here, this high, or if we logically think, this should be our final targets, right? Because this is the main swing on the higher time frame, 1 hour and then 4 hour. So if we wait and play forward, okay, price did visited our, but all right, done. So this is the reason why I book 1:3 here, cut out 80% and then leave the 20% for the rest, guys. Now if we play forward, let's remove this again. Price is around this POI here, right? Expanded. Can we see any change of character here? Sorry, market structure shift. Okay. All right. We have market structure shift. Right. Last POI. This is this is the order block. Right. In this case, we are not considering this as order block, but this as order block. Why? Because this is aligned with the overlapping with the fair value gap. So this is a very strong POI liquidity here, swing low, as you can see. So following the same checklist, market structure shift, body close above the high or low, displacement, POI into the discount zone, and then boom. Now let's wait. Okay, price is expanding very fast. We still have the target here, so it's all right, unless price, wants to sweep this high, and then this entry will become invalid that time. So if you, okay, price expanded, guys. All right, Ben. So now this trade is invalid. This setup is invalid. Why? Because it already swept the highs, right? But my job was to show you the entry model here, and as you can see, 2 TPs hit right here, because if you even catch 1:3, 2 days, 2 trades, that's 6 hours, and if you book 80% on 1:3 and then leave the rest, you can be safe, and that's a good risk management. So anyways, that's all for the video, guys. A complete breakdown of my simple market structure shift entry model. I hope this video was very helpful and easy to understand. See you on the next one.